Well, thank you for joining us for tonight's virtual Backpacks to Briefcases, Financial Security, How to Survive Uncertain Times. I'm Greg Berry, Assistant Director in the UAB Office of Alumni Affairs. Just a quick disclaimer, since this is a virtual discussion, please don't be surprised if you hear or see things that seem out of place. I would also ask to have you change your name on Zoom so we can better identify our guests and the people that are asking our questions. Just go to your name on the participants list, click more, and enter your name if it's not there. Also, in order to be mindful of our guests, I would like to ask everybody to remain muted for tonight's presentation. Today, we will be learning how we can best budget our money to enjoy today while preparing for tomorrow, despite the current global conditions. Our featured guest tonight is Dr. Stephanie Yates. Dr. Yates earned her BS in Marketing, MBA in Accounting, and MA in International Economics from the University of Cincinnati. She then earned her PhD in Finance from LSU. Dr. Yates is director of the Regions Institute for Financial Education and an associate professor of finance in the Class School of Business. She also serves as the faculty advisor for the UAB chapter of Alpha Kappa Psi, a business fraternity for the UAB. Now, before I turn things over to Dr. Yates, we're going to pop up a poll for everybody to participate in. We want to know how nervous you are about your finances right now. Go ahead and cast your vote. We have 3 different options for you. Are you not at all concerned, somewhat concerned, or very concerned during this current climate in the world that we are facing today? I will leave this up just for a few moments more. Just a reminder for everybody as well, go ahead and change your names and utilize the chat box function. We will have a chance for Q&A a little bit later in the presentation after Dr. Yates' presentation. And here we see our results for the poll tonight. It seems like most of us are somewhat concerned about our finances right now. So without any further ado, I'm going to go ahead and turn things over to Dr. Yates for her presentation.
Thanks, Greg.
You're welcome.
So that's a helpful starting point to get a sense for where the group is, and we've got a good group tonight. And I think that's kind of not terribly surprising that most of us are a little bit anxious, maybe not worried about where our next meal is going to come from, but the thing is the uncertainty. We don't know how long this is going to last, so we're not exactly sure if we're doing the right thing. So let me just start off by saying I'm going to throw a lot of things at you. Some may not apply to your particular situation. Maybe it'll apply to someone that you know and you can pass the information along. But the idea is take what makes sense to you, make it your own. And if I've given you one tip by the end of the night that's helpful, then I feel like it was a success. So think of this that way, and we'll take an open-minded approach. So let's go ahead and get started. Here's what I want to cover. I want to start off with just some kind of soft topics, thinking about how we need to approach what's going on right now in terms of what we can control versus what we can't. What do you do if you find that, this is just beyond my pay grade, beyond what I can handle on my own? Where do you go for help? Dig a little bit more into those emotions and how they impact us when we're making financial decisions. And then probably will spend the bulk of the time really zooming in on some tips and tricks. And here again, if the tips don't fit your particular situation, pass it on to someone that might find it useful, or just hold on. Maybe the next tip will be useful for you. So let's move on and talk about this focus that we need to have. And one of my mantras, or I can kind of think of this as one of my mantras, whether we're in a pandemic or not, and it's easier said than done. And I recognize that with a lot of the things that I'm going to talk about. But in a time like this is so important. We really need to figure out what matters and what doesn't matter, because there's so much being thrown at us. and then think about what we can control and what we can't, and really just focus on those things that are important that we can control, and everything else we're just going to have to roll with. And so relating that specifically to our finances, that means, and I'm going to clarify some of this stuff. That means, given our possibly new situation, we need to create a spending plan. So maybe we did or didn't have a budget going into this, but now we need to take a look at what we have available and absolutely come up with a budget related to this new income level or potentially new income level. And then, the obvious, cut back on the unnecessary. And my husband and I were talking about this earlier. The crazy thing, at least for us, and I don't think I'm alone, but the crazy thing about this has been typically when, well, maybe not typically, but sometimes when you're facing a life change, you kind of have a sense for how long it's going to last. And so a lot of us went into this thinking, oh, okay, this will just be a couple of weeks. We live in the US. Surely we can handle something like this and this won't go on forever. Then they said, well, the virus doesn't like warm weather. So by the summer, this will all be gone. And we'll think about it again during flu season. That didn't work out either. And so we kept thinking that it would be over soon, and it's been lingering. So that makes the cutting back even more important. And so I said all that to say, when we thought it was going to be very brief, I think a lot of us didn't really cut back because we didn't really see the need. And then some of these things relate to a very special case. In some cases, people have actually ended up being better off, whether it was because they were receiving unemployment plus that little $600 boost. So they actually were making more money in unemployment than they were beforehand. Maybe they're entrepreneurs and they just happen to be in an area or quickly shifted into an area that is thriving because of current circumstances. Whatever the reason, there are some folks that actually are better off and have extra money, but that money might be temporary. So if you fall in that situation, it's still very important to control what's happening, control what you can. So if you're finding that you have extra money for whatever reason, try to use it constructively. Put some aside into an emergency fund, because if that money is temporary, there are going to be emergencies. Pay off some debt, kind of make your budget a little bit more comfortable, a little bit easier. And to the extent you can, try not to create new debt. Try not to use the credit cards. Now, of course, there are people who are in the opposite predicament where they actually have less money. They have to incur debt because that's how they're making ends meet. So again, it really just depends on your situation, but that's really the first step is you have to identify, and I'm going to talk about this a little bit more in just a moment, but you have to identify what is the true nature of your financial situation. Because so often when we find ourselves in some sort of financial predicament, we just don't want to deal with it. As we say, we put our heads in the sand and just hope that it'll just go away or get better on its own. And oftentimes that doesn't happen. So the first thing that we've got to do is figure out, well, what are our issues? What do we have coming in? What's the least we can have going out? And how do we make this work for an indefinite amount of time? So that's that whole taking inventory part of this. And so once you've taken inventory, you've cut back as much as you can, then kind of make a plan, make a monthly budget, and think about, okay, here's what I can count on coming in, here's what's got to go out, and here's how I can make this work, or here's how long I can make it work, or here's what I'm going to need to have happen to make this work. And so all of that is going to be unique to your own situation. And, I'm a realist. And so some people like to, as they say, look at the world through rose-colored glasses and think, oh, this is going to be over next week. Something good is going to happen to me. I'm going to win the lottery. All these great things are going to happen. I'm not a Debbie Downer, but I do like to prepare. I like to hope for the best, but prepare for the worst. That way I'm always covered. So what's my worst case scenario? Let's plan for that. Let's create a budget and a plan around that worst case scenario. So anything that happens is just gravy on top, as opposed to planning for that best case scenario. And then if something bad happens, you don't know what to do. So those are the things that you can absolutely control. You may not necessarily be able to control what's coming in or what's going out, or what has to go out, but you can control identifying your situation, inventorying your finances, and trying to put that plan together. So as we go along, I'm going to add some more specifics to that. But let's continue with some of these softer issues. Before I get into the meat of those soft issues, just a quick mention that, you don't have to do this all by yourself. If I've already started giving you heart palpitations because I'm talking about budgets and inventorying finances, and I tried not even to use the accounting terms and all of that stuff, but if the idea of trying to manage this on your own is overwhelming, you're not alone. There are lots of folks with great credentials who can help with these kinds of issues. There's a group called Accredited Financial Counselors who kind of help more on the budgeting side, the day-to-day money management side. And there's actually an initiative that's funded by Wells Fargo where these accredited financial counselors will counsel you for free through the Yellow Ribbon Network. So that's usually for military personnel, but because of this pandemic that we're facing, the Yellow Ribbon Network is opened up their counseling services to anyone. So if you go to that website, yellowribbonnetwork.org, you can set up an appointment with an accredited financial counselor. A certified financial planner is kind of a step up from an AFC in that they tend, honestly, to work with people with a little bit more money. And they're more focused on the long-term end of it, investing, retirement planning, estate planning, and so on. But if everything that's going on has really made your retirement portfolio take a hit, or your estate and your estate plan take a hit, it might be a good time to talk with a CFP and maybe put together a comprehensive financial plan, or just ask a couple of questions. You should be able to just get a 30-minute to 1 hour consultation at no charge just to find out if that's the type of help that you need. And then there's certainly many more places that you can go than this, but one other one that I wanted to mention is through your employer, they may have an employee assistance program. And so that is typically at no cost to the employee. At UAB, it's the EACC, Employee Assistance and Counseling Center, and they typically provide help with mental health counseling as well as financial health counseling. So that is another resource available to you. But let's talk about some of these soft skills. And my overarching message here is manage your emotions, meaning we don't make good financial choices when we're emotional. Emotions are important in that we need to recognize what's making us happy or sad or anxious or whatever the case may be. But we have to be careful not to act on those, or at least not to act too quickly. And I've kind of just thrown a lot of things here, but a couple of key things regarding emotions and money. Number one, don't panic. Whenever I get interviewed about some big financial issue that's in the news, stock market dropped, or I don't know, some new legislation or whatever, my first comment is always don't panic, because that's not going to help you. Even no matter how bad the situation is, panicking is not going to help you, because most people make really bad choices under duress. And what tends to happen in the financial markets, if we all panic at the same time, that just makes the situation much, much worse for everyone, because we have this kind of, because of market forces, we have this immediate kind of downturn in the markets. And so panicking is never a good idea. There's also this phenomenon called herding. I was going to say hoarding. Herding, where sometimes we see one person acting a certain way and we don't really know why. Kind of like this is what happened way back in the 1920s with bank runs. You see one person going to get their money out of the bank, so you go too, even though you don't know why the first person went. And then more people follow suit, and now it becomes a huge crisis. So you want to be careful not to panic, not to be overly negative. And so this is where that balance is so important between our emotions and getting good information and good advice about what exactly is going on. What do I need to do? So don't worry about what's already happened. We can't change it. So remember, we're just going to focus on those things that matter, that we can control. So we're focusing on the present and the future. The future is based on our plan. And so the best way to manage your emotions and not to make those knee-jerk, panicked financial decisions is to ask yourself very plainly, well, what is it that's stressing me out? Is it this particular bill that I can't pay? Is it my debt load? Is it this person that just called me? Is it my decrease in income? What exactly is that thing? And then start trying to address that thing or those things. But what's really important in all of this is that you can't ignore your emotions altogether. If this is stressing you out and making you really sad or anxious or uncomfortable or some negative emotion, be honest about it. Be honest about your mental state. Get the help that you need financially, emotionally. Take really good care of yourself, because you're the only you've got. And to the extent that you can, learn from this. If you've got extra time on your hands, learn. I've been telling my kids every day, learn a new skill. They hear all these stories about the great works of art that have been created during times like this. So use this as a growth opportunity, and also don't isolate. Isolate to the extent that you need to be healthy, but don't cut yourself off from the world. Stay in touch with your support network, and so that you can control your mental health to some extent. So now let's start getting into the meat of the financial end of this, Mac. And so what we'll do is just talk about a few tips and tricks. I tried to pull together some things that I see most people voicing concerns about, or just things that maybe you hadn't thought about that you might want to consider given what's going on these days. So let's start with banking. We find that a lot of folks, older versus younger, still aren't using online banking. And so this, when you think about a time like this where we really shouldn't be going out any more than we have to, and we really should be kind of staying at home using the internet as much as we can, it's a time to start thinking about online banking. And so, Mac, if you move forward, just for, I know all the young folks are saying, what is she talking about? There's another way to bank besides online banking. But I just finished a study recently that showed that older people and minorities are less likely to use online banking because they're concerned about safety, privacy, and so on. And so this is a time to maybe give that another thought. Or if you're using online banking, to maybe consider expanding your use of online banking. So maybe you're using it to check balances, but maybe you might want to consider using it to make deposits. I know not a lot of people feel really comfortable, or maybe not so much feeling comfortable, but I think making deposits is kind of one of the less frequent uses of online banking. You can't deposit cash online, but you can deposit checks, you can transfer funds, you can pay bills. So start thinking about maybe handling your banking this way, and it may be more efficient, maybe a cost-saving measure. Maybe if you set up your payments on a regular basis to be paid automatically, some creditors will even cut your rates. So something to think about when you have some extra time on your hands. So that's an easy one. Let's talk a little bit about credit. So this is a big deal. Think about, some people are concerned that, well, I've got less income, but I still have all these bills to pay. What happens if I pay them late? What happens to my credit? How do I check what's going on with my credit? So let's talk about that a little bit. Number one, if you are concerned about falling behind on paying some of your bills, and here we're specifically talking about debt, call your lenders, call your loan servicers, your creditors immediately, and let them know that you have a loss of income due to the coronavirus and you might need a little bit of help. And then, and I'll talk about some specific instances in just a moment, but you want to check your credit regularly. This is something that you should do all the time, but especially right now, if you may be having some difficulty falling behind, normally you get one free annual credit report from each of the 3 credit bureaus. Well, because of what's going on right now, and the government and government agencies recognizing the impact that has on consumers, you can actually get a free credit report weekly until next April. And so people were asking me, well, should I pull my credit weekly? Well, I would think of it the same as the free annual credit reports. You don't pull all 3 at the same time. So if you were getting them free annually, you would get one in January, for example, one in May, and one in September, so that you're checking regularly, but kind of spacing it out so you can always see what's happening. With the free weekly credit reports, I wouldn't necessarily check all 3 bureaus every week, even though you could. I would still space it out, because the thing is, most creditors don't update your file weekly. They update monthly. So it really doesn't necessarily help you to see it every week, but I think it would be helpful to see it every month. So I would maybe do it that way. So if I was so inclined to check my credit that often, I would probably space it out every 10 days between the 3 bureaus. And then, the 3 bureaus are Equifax, TransUnion, and Experian. Well, Equifax is giving 6 free credit reports every 12 months. So that's one every 2 months until December 2026. So that's something to think about. So they're going 5 years beyond the weekly credit report period. Now, this last point, let me explain. There are some special credit reporting rules because of what's going on. So again, if you fall behind on payments to your creditors, number one, you're going to call them and let them know, ask for help, at least have them noted in your file. But what these special rules say is that if you were current before or on January 31st, so before all of this happened, but then you fall behind after January 31st, your creditors are not allowed to report you as late until 120 days after the national emergency ends. So 4 months later. So you've got this window. So if anything bad happens, you lose your job, you lose income, you fall behind, the credit card companies can't report you late. Now, the exception is if you were already late when this happened, then all bets are off. They can still report you as late. And if you are late after this window, then they can start reporting you late again. But in this window, if you were on time before it happened, but you fell behind during it, then it's as if those late payments never happened. So that's pretty cool. Now let's talk about debt. How will you handle, or what can you do about the debt that you have? Couple of things. If you have student loans, remember federal student loans, because there's federal and then there are private. Federal student loan payments are postponed until the end of September, and the interest is subsidized. So you don't have to there's no additional interest charges. So you've got that relief. Now, if you have a private student loan, so that means you got your student loan through a bank, you didn't go through your institution, you're going to have to contact that bank or the servicer to find out what options you have. So that reprieve until the end of September is only for the federal loans. Now, if you have auto loans, that's kind of similar to those private student loans. You're really just going to have to talk to the servicer or the bank or whomever is holding that loan and see if they can work with you. But some things to suggest is maybe see if they can just change the payment due date, meaning if your payment is normally due on the 1st of the month, see if they can change it to the 25th. That automatically gave you 24 extra days to make the payment this month. And so if today is the 10th and you can't make the payment, and you're 9 days late, if they move it to the 25th, you just bought yourself 2 weeks and you're not late. Maybe ask for a payment plan or ask for an extension or deferral. What some lenders will do is say, okay, well, don't worry about this month. We'll just take this month's payment and put it on the end of your loan. So you still have to pay it, but they'll just extend your total loan period out by 1 month. They may even give you more than 1 month, but on that, you'd have to call and talk to your lender. But some watch outs, try to avoid debt settlement companies. You've seen these commercials on television where they say, oh, if you owe your credit card company $1,000, we'll get it knocked down to $100. The problem with that is if the credit card companies don't have to agree to it. And if they do, it tends to wreck your credit. And oftentimes they don't you could have gotten a better deal if you had just called them yourself. But, a lot of people will go to these debt settlement companies because it's quick and somebody else handles it. But, I'm just of the mind that I don't like to pay somebody for something that I can do myself and possibly do even better. And then lastly, know your debt collection rights. A big one is if you dispute a debt in writing, then the debt collectors cannot continue to collect on that debt until that dispute has been addressed. And so, make sure that you know that they can't harass you. They can't send you postcards that has all your private information available for everyone to see. So you do have rights, even if you fall behind. So let's talk about the big debt, mortgages. There are also relief options available to mortgage holders. So again, it depends on if your mortgage is federally backed or not. If it's federally backed, so it's an FHA, a VA, a Fannie, a Freddie, a HUD, there's some, you worked with some sort of agency, federal agency, to get your mortgage. You can't be foreclosed on until at least the end of August, so the end of next month. And you can even request and typically obtain a forbearance for up to 180 days. So forbearance means that you still owe the money. So it's kind of like that car loan that I talked about, where you could just get those payments moved to the end of the loan. They just say, okay, times are tough right now. You don't have to pay for maybe as much as 180 days, but you still owe the money, but we're just going to suspend your payments for now. So that's what happens on the federal loans. Just like with the student loans, if your mortgage is not backed by a federal agency, you're going to have to talk to the lender, talk to the servicer. And you can look on your mortgage statement to find out who your servicer is. And actually, if you don't know, there is a clearinghouse that you can go to through the MERS system and find out who your servicer is. You know, sometimes our mortgages get sold a couple of times and it's hard to keep up, especially if we're making automatic payments through our bank. Now, what if you don't own your house, Mac, and you are, well, before I talk about renting, I'm sorry, let's finish up with the mortgages. So what do you do when you call and ask for help? You have your account information and just ask a lot of questions. So I gave you some suggestions on what questions to ask, but just, you know, you're asking, what's the process? What happens if I don't like what you decide? What are all of my options in terms of reducing my payments, suspending my payments? Are there any fees involved? What happens if I do get this forbearance or suspension of my payments? What happens at the end? Are you going to remind me what my new due date is? Are you going to call me? Do I need to call you? So the bottom line is you want to make sure that you're absolutely clear on how this is all going to work, what they're going to do, and what you're going to do. So of course, you want to get all of this in writing. And then what happens while you're in forbearance? So let's say you do have a mortgage where the lender is willing to give you a forbearance, suspend your payments for a certain period of time. What do you do while you're not making those payments? Well, hold on to that agreement so you remember exactly what you're supposed to do. And then if you get monthly mortgage statements in the mail, make sure you're looking at those and making sure that they reflect that agreement that you made. So that's why you want to have all this in writing so you can compare it and you've got some recourse so you can say, hey, no, this didn't turn out the way that I expected. And then I'm laughing because this is one that always happens to me when I'm paying off something. I forget that I had it set up on automatic payments and I keep paying on something or I keep paying a higher amount than I should have. So if you have your mortgage set to be paid automatically and you're fortunate enough to get a forbearance, make sure you change those automatic payments. And then remember, we just talked about all of the special credit provisions. So check your credit regularly. Make sure if you did get the forbearance that you're not being reported as behind, because that shouldn't happen. You've worked out an arrangement. And then as soon as you're able to make the payments, because remember, this is a forbearance. Your payments are suspended. They are not forgiven. So as soon as you're able to make payments, go ahead and start making those payments again so that you can get back on track sooner than later and not have those payments kind of drag on any longer than they have to. But then on the other side, if when that forbearance is over, you're still struggling, ask for an extension. You never know until you ask. So now let's, I think, talk about renters. Yeah. So we talked about mortgages if you own, but what if you rent? Renters have some options as well. And basically the rental provisions apply to renters or landlords who receive some sort of federal assistance and or CARES Act money. And it's hard to exactly know who had it or not, but in most cases, these provisions end tomorrow. But what it meant was that you could not be evicted for not paying your rent or fees or charged any fees or penalties or given a 30-day notice to vacate, only for non-payment. Now, if you burn down your apartment, or, break some other part of your lease, they can start eviction proceedings for that reason, but not because of non-payment. And also, you may be able to go past tomorrow if the landlord received CARES money. So that the CARES Act was that big legislation that made a lot of these provisions and stimulus payments and so on possible. So if your landlord received that, then you may be able to be protected a little bit longer. Now, just like the credit, if you were already in the process of being evicted on March 27th, when all of this went into place, then that can still go forward. You're not saved by the bell, so to speak. And again, this is a forbearance. And it's not even a forbearance in that they're saying that you don't have to pay. They're just saying you can't be evicted. So your rent payments are still due. So if you can pay your rent, then you should, because when this period is up tomorrow or maybe later, if the landlord is receiving CARES money, all of that back rent is due, or they can start the process of eviction. And then there are some other services where there's a moratorium as well, meaning you can't have your utilities shut off and so on. And so there's actually a clearinghouse for that type of information as well, evictionlab.org, where you can go in and look at your city, your county, and find out what might apply to you. So let's talk about just a couple of other things to think about given this crisis that we're in and how it relates to your finances. Gosh, I get so tired of talking about scams, but that's just the reality. And so, the more technology, the more scams, the more special situations, the more scams. And so that's not unique or uncommon in what we're experiencing now, and that we've got people out there offering a COVID-19 vaccine or a cure for the low price of whatever. We've got folks out there saying that they're representing some sort of coronavirus charity. I got a call from someone saying that my dean was in trouble and needed me to send him gift cards. That's a scam. Or scams where they're trying to get your Social Security benefits. So just, it's kind of the same song, different verse. I'm full of them tonight. But where you've got to be careful about giving out your personal information. You've got to be careful if it sounds too good to be true, or if it just doesn't seem right, it's probably not. And I would say the best way to check is ask for a phone number, ask to someone else that you can talk to, that you can call back to verify. Contact the Federal Trade Commission at this website here. If it's some sort of solicitation, you can actually, in Alabama, contact the Alabama Securities Commission. So there are a lot of places you can call, or websites that you can go to check up on someone and find out if they're legitimate. There's GuideStar, where you can check on charities, just many, many examples of ways that you can check. And, and that's another watch out. If someone won't give you a phone number or tells you that it's urgent and won't give you time to check to find out if it's legitimate, that's usually a red flag as well. So that is all that I had prepared. I wanted to make sure that I left us enough time for questions and kind of leave you on this positive note that it feels scary sometimes, but when we take control and focus on the things that we can control and get help when we need it, we got this. We can handle it. So what questions, I think Greg's going to monitor the questions for us, but what questions can I answer?
Thank you so much, Dr. Yates. And if you do have questions, please put them in the chat box, and we'll just kick things off with, how do you plan for the worst case scenario? Because this COVID stuff is probably worst case for many people that was totally off the radar before.
Sure. So in the worst case scenario, think about it financially. Worst case scenario, I always think in terms of a budget. So in my budget, I've got my income and I've got my expenses, and I need the income to be more than the expenses. So the worst case scenario is when the reverse happens. My income is higher than my expenses. So what do I do? Well, hopefully I've got some emergency money, some reserve funds. If I don't, hopefully I have access to credit. If that's not the case, then I've got to start looking at how to cut expenses and how to get payments suspended and all those things that we talked about in those specific areas. So the worst case scenario to me financially is if I have more income or less income than I have expenses, and I've got to address both ends of it. How do I get more income, and how do I cut my expenses?
You mentioned having an emergency fund earlier in the presentation. How much money do you recommend having in that?
I look at that emergency fund in two ways. I kind of look at the short-term and the long-term emergencies. So in my short-term fund, I need to have $1,000 at least, because short-term, my short-term emergency fund, that's that little stuff that adds up. That's the flat tire. It's the, I forgot that fee. Oh, I forgot about, these little things, but they add up. And so if you have 2 or 3 of those, now the rent might be late. So that's the one side. Long term, that's the 3 to 6 months of expenses. And we use that number because if we have that worst case scenario where we have a complete loss of income or a significant loss of income, it typically takes about 3 to 6 months to recover from that. And so we tend to say 3 months if you have a partner or family members that you can lean on, 6 months if you're kind of on your own.
Is there a good place people can start researching good certified persons to begin the trust and or estate planning?
Yes. A couple of places I would try. Number one is the CFP board, because they are the governing board for certified financial planners. And so they have a section of their website where you can search for a certified financial planner. And so if you're on that website that those people are credentialed, they're current, they've passed the ethics test and so on. Also, if you're looking for a registered investment advisor, so someone who's actually registered to sell securities, then you can go to FINRA, and they have a place where you can check to see what licenses someone has.
Are all CFPs created equal, or is there a vetting process that you can do to make sure you're comfortable with selecting one?
To answer the first question, no, they're not all created equal. But when you just go to the CFP board website, you're not really going to be able to tell that. They will tell you things like where they're located, what they specialize in, meaning some will specialize in working with women, doing estate planning, doing retirement planning, and so on. The best thing, so getting to the second part of the question, the best thing to do to see if you're comfortable with them is schedule an appointment. Most certified financial planners will give you that 30-minute to an hour free consultation. And I would meet with 2 or 3, try them out before you buy them, just to see if you're comfortable. What kind of vibe do you get? Women historically get very uncomfortable with financial planners, because a lot of financial planners just don't know how to relate to the special needs and concerns of women. And so you may want to find another woman, or you may want to find someone who has a lot of female clients and so on. So I would say spend time with a few before you commit to one.
How do you find out if your landlord received CARES Act relief funds? Do you just have to plainly ask them?
Yeah, I was digging around. You can find out if their mortgage on the property is backed by Fannie and Freddie by going to the Fannie Mae or the Freddie Mac website. But I was digging and digging, and I could not find out just by putting the property name in if they received CARES money. And so, that's a big deal because of that renter protection. And I think you just have to ask, and they don't necessarily have to tell you. But I believe the CARES disbursements are public knowledge. So I would, I'll keep digging on that and see if I can get a better answer. But I could not find out just by going to one of those federal agencies. So you'd have to go to the CARES disbursements, and then you'd have to know the exact name of the entity that owns the property.
If you don't have an investment portfolio, is now a good time to start?
Honestly, I think any time is a good time to start if you're cautious. It's not, oh, I've got $1,000 burning a hole in my pocket and I want to buy penny stocks, or I got this hot tip. But the market is certainly down a little bit. And so if you do your homework and kind of enter cautiously, I think it absolutely could be a good time. What I've been telling folks is, because a lot of us have some extra time in our hands, I think this is a good time for an investment club, where you get together with a group of friends and everybody puts in $20 or $25 a month, and together you study the stocks that you want to invest in, and you make decisions as a group, and it's part social. And you can do this on Zoom or Google Meet or something like that, but it's part social and it's part financial, and you all kind of grow and learn together.
If you have money in a savings account at a bank or a credit union and it's not growing because that interest rate is low, it's a transfer to another institution with a better rate?
Do your homework. A couple of websites I like, bankrate.com, or sometimes it's Bankrate Monitor. I think that takes you to the same place, but they will show you rates at a lot of different institutions, not necessarily all of them, but the ones that report. And you can find out where you might get a better deal. Honestly, if you're just looking at passbook savings, it's going to be pretty low across the board, but where you might be able to do better switching institutions is if you're willing to tie up your money a little bit longer in the certificate of deposit. So I would absolutely rate shop.
For all of our guests, we do still have time for questions. So keep them coming in. Are there suggestions for prioritizing how you pay off your debts, which ones to pay off first?
So there's typically two ways that people look at getting out of debt, and either way refers to what we call a debt snowball. But the question is, if so the way the debt snowball works is, once I pay off one thing, I take what I was paying on that and I add it to the next thing on the list. But the question is, how do I prioritize my list? And that was basically your question. And there's two ways you can do it, either by interest rate or by the amount owed. Theory would tell us that you should prioritize by interest rate, because if you pay off your highest interest rate debt first, you're going to save money in the long run. But psychology tells us that we should do it based on amount owed, because if you pay off the lowest amount owed first, you're going to get really excited and feel like, oh my gosh, I finally paid something off. And then you can cross it off and feel like you're making progress. But when you do it based on interest rate, it may take a little longer to see that first one crossed off. But either way is great. But what you want to do is take all of your debt and put it in order, either by the interest rate or by the amount owed, and pick which one makes more sense to you.
Sticking with paying off debt, if there's extra money, is it more important to save that extra money during these uncertain times, or is it more important to pay off that debt?
You know, I'll tell you what Dave Ramsey would say. And I'm not necessarily subscribing to his method or over someone else's method, but it'll just give you one school of thought. And that school of thought is get that short-term emergency fund going, save $1,000. And then once you get there, stop with the building up the savings and attack the debt. And the logic is this. You want to compare the interest rate that you're earning on your savings versus the interest rate that you're paying on the debt. I mean, that's the real answer to the question. And so if the interest rate that you're paying on the debt is higher than what you could earn on your savings or investments, then you need to pay off the debt first. But I would still say you want to have a little bit of emergency funds before you start getting really, really aggressive paying off the debt.
If you have a decreased savings amount due to the current situation, but you're still trying to save for that new home, is it better to put into savings or invest in potential long-term growth?
It depends on your investment horizon, meaning if you're trying to buy that house in the next 6 months to a year, I probably would be careful about putting it in anything too risky like the stock market, because it's not certain that we're at the bottom just yet. And typically, we've got a double whammy going on. We've got a pandemic and we've got a presidential election. So historically, the stock market gets very uncomfortable around presidential elections when we have a lot of uncertainty about the potential outcome. And then with the pandemic on top of it, that makes the stock market very volatile. So if you've got a short investment horizon, I would stay away from the stock market and focus more on maybe the certificates of deposit like we talked about, but safer, lower payout, but a little bit safer, lower return, but lower risk as well if you've got the short time horizon. But if you're talking 5 years out, maybe you could take on a little bit more risk.
Awesome. Dr. Yates, thank you so much for joining us tonight. Very informative discussion, great information, and it was just a great night having you with us.
Well, thank you. I always enjoy being with you.
Hopefully we'll have you on again in the future. Just a heads up to our guests, a recording of today's webinar will be available online starting tomorrow. And be sure to register for upcoming webinars sponsored by the UAB National Alumni Society. On August 4th, Brandon Wright from the UAB Career Center will join us for networking and interviewing electronically, the do's and don'ts. We'll also have a little fun on August 11th with our second UAB Trivia Night. You can register for both of those and future webinars at alumni.uab.edu. And don't forget to check out Green and Told when you're out and about or even in the house. The podcast gives us a chance to share stories from members of the UAB community. New episodes drop every other week. The most recent one was this past Monday. Listen in on Spotify and iTunes or visit alumni.uab.edu/greenandtold. Also interact with us on social media. We can be found at UAB Alumni on Facebook, Instagram, and Twitter, or look us up on LinkedIn. Search UAB Alumni Career Community. And finally, if you want more information about the National Alumni Society, visit us at alumni.uab.edu or just email us at alumni@uab.edu. Once again, thank you so much for everybody joining us tonight with our special discussion with Dr. Stephanie Yates. Good night. We hope to see you all soon, and go Blazers.